Well, the market averages are doing an about face the last couple days. We had a bounce that seemed like it was potentially materializing by way of QE, but as of now, we're seeing a reverse effect. It's frustrating to see these up down days when the market's trying to find its direction, and certainly risk management is always key, especially during these sorts of noisy periods. So it's best, to keep your stops tight as always, or just so that you don't give back anything that you might have made earlier on. Uh, we're seeing that while even though we get these uptrends like the one we had, off the February lows, it's still a very suspect uptrend because most stocks are not enjoying that kind of run. They're often fraught with trends that fizzle out pretty quickly, or that have unusually high level of correction, so that it forces you out of position. And right now, with basically commodities and oil trying to move higher, that seems to be some sort of catalyst for the markets going higher. But nevertheless, we're also seeing markets that are getting more and more exhausted. I think with each passing quarter. Certainly, the markets have had steep corrections since last August, and even though QE continues to exist and central banks continue to print, it only can be so effective. We had some substantial corrections in there, and I think that while we've written in the past that it's a tug of war between QE and these markets, which are not right, and certainly the global economy is not right. And the question is which is going to win. And I think it really comes down to how much money printing that takes place going forward. I know that it's interesting that Bank of Japan did not do as everyone expected. They expected Bank of Japan to go ahead and indicate that they're going to go even more negative with their rates, but they stood pat, which I think shows that this negative interest rate scenario is not a healthy sign, and it's not it's generally not something that can work or fix the problem that exists. I think Switzerland's got negative rates. So you've got Europe and Japan that are sitting with negative rates, and you have Yellen, who kept the door open to that possibility if it got, I guess, that dire. And the thing of it is that all these central bankers are scratching their heads, why isn't all this easy money helping the economy? Because everyone's hoarding. People don't trust the future. People are losing confidence in their governments and their central banks, and that's helping, I guess, the price of gold, because that part of that rise is due to the fear trade. And going forward, it seems like this unprecedented bull market, which began in 2009, and it could be argued that it ended over the last several months because of these steep corrections. But it could also happen that these central banks will continue to print, and therefore that money has to go somewhere, and it's generally going to go, a lot of it's going to go into equities because you get a better return that way. And a lot of mutual funds are under a mandate that they have to be 90% invested at all times, so that money ends up pushing these markets higher. But you'll notice that the leading stocks aren't getting really pushed higher, or at least they're not acting as leading stocks should act. And it's instead the utilities, the utility index that's hitting new highs, and these defensive names. And if you go back many market cycles and many decades, when you see this kind of behavior where the leading stocks are the defensive names, you know something's wrong. And usually it's not long after that point that you get a serious bear market. But the difference between all those times and today's market is that today's market is helped by the quantitative easing effect. And that's not going to go away because it's political in nature, and politicians want to win their next election, and so they're very short-term thinking. And QE is the band-aid. It's the band-aid that's not helping the infection one bit. We remain ever vigilant to watching for the next possible sharp correction. I'm reading, I'm never got around to reading this book, but it's called Anti-Fragile by Nassim Taleb. He wrote The Black Swan. And what I like is I've always meant to read it, and I know what it's about, so it's kind of like preaching to the choir, but I like the examples he uses. And right now, what we're seeing is potentially heightened levels of volatility as the market gets more and more worn out, and as things go from bad to worse economically. And so he talks about anti-fragile systems which would thrive under these conditions. And certainly trading systems like CanSlim are fragile, very fragile, and that's why they don't work anymore. The pocket pivot is less fragile; it's a little bit more robust, but when you don't get trending markets, you have to utilize profit taking very quickly and keeping your stops tight. So you have to use other measures to baby step your account forward. It's not an easy environment, but it struck me that volatile markets, what can benefit from volatile markets? And there's a couple things that, the added volatility, like in 2011, there was very volatile markets, but they were still coherent. And that was a very great profit-taking, profit opportunity in market timing. And this year, hopefully, is going to be another year of this enhanced volatility because, like I said, markets are getting tired out. And as I speak, the markets look like they're going to roll over again and potentially continue this downtrend, which started in what was that, about mid-April. In other words, that's all to be said that there's always a way to make money, but the money making may be enhanced by the added volatility that we see going forward, and we'll just have to wait and see. But clearly, being vigilant on the short side, because as we all know, when a short works, it's the easiest thing in the world. The money comes very quickly, but you have to be right on your timing. And this added volatility will give us those added opportunities to make money on the short side through short sale setups and whatnot. And also the fixed volatility model, of course, I said, I don't want to repeat myself, but it does like this these sort of volatile markets. And it's the construction of it is designed so that it can take many little losses, but it more than makes up for it with the bigger gains. So it should be interesting going forward. And in the meantime, we just sit and watch for profitable opportunities as they emerge. I guess with that, I will turn it over to Gil.
Yeah, speaking of profitable opportunities as they emerge, the thing to do this morning was to short the jack to the upside. So I'm basically sitting here. I came in overnight, I think around 40% short, and short names like GoDaddy, which yesterday, this one to me, I think we talked about this before. It's sort of a weird. See the V-shaped crap again? Pardon my French or my English or whatever. It's a V-shaped cup with handle fails on the breakout here. So it's a late. I don't think you could call it a late stage failed base. I guess maybe you could. You would say this is the first base, and then this thing here. Here, let me get my magic pen here. I'd also point out that because I'm so heavy short right now, I'm watching the market closely, and we may be interrupted if I have to do some trades. But right now, everything is coming down very nicely. A lot of things reversed after being up early in the day. GoDaddy actually never was up, I think, for the day. You can see here that that wasn't the case. But you can see you've got this, you could call this the first base, and then here's the second base, and I guess this is a third base. So I guess it's a third stage base, but I don't know. To me, it just looks like a big sloppy structure. You had a V-shaped base. That's like a pod to me. I don't. How deep is that, Dutch? You're going from like 36 down to 24, so 12 points on a third. That's pretty deep. I think the V-shaped thing is what makes it vulnerable to fail. So yesterday it's sitting up here at the 50-day, and I blast on short side. Okay, and that works. And but at the same time, and this is part of how I take a bifurcated approach, and that is I'll play long things as long as long things will work. At the same time, that'll play something on the short side. So, I'm an equal opportunity trader in this market, and the volatility sometimes makes that possible. A couple of things that I picked up on yesterday: you had Electronic Arts was a gap up, and it could have been treated as a viable gap up. I think it opened at 70.43. The low is like 70.24, so it never really looked back. It just headed straight to the upside, and it's still going. Another one that I liked, Activision on a viable gap up here. You get the pullback. To me, that seems like normal porosity on this thing, but look at also here, it is sort of a big cup with handles, so these could rally for a while and then fail, and I'm actually out of this one. I thought it was a good trade, especially with the way the general market's trading right now. It looks vulnerable to a failure, but I'll get to that in a little bit. But these are working, and it might be thematically something to keep an eye on. We were talking about this yesterday, Dr. K and I, and my son is a big video game fan, and he's been telling me that it's really like a social thing for kids now. You're not sitting all by yourself in a dark room playing a video game all by yourself. And there's only a couple other things that you might sit looking at something all by yourself in the dark room, but we won't go into that. What he's doing is hanging out with all his friends, because he goes to private school, and so his friends are flung out all along the area where we live, with Santa Monica Bay, basically all along the so-called Queen's Necklace, all the way up to Pacific Palisades down to Palos Verdes, and he's got all his friends in there. So to go see them, it's a bit of a drive, and I asked him, well, you want to go get together with one of your buddies? And he's like, no, we're already hanging out. And they're all online playing games, so I see this as a trend. Also, young adults are big on this, and in a crappy economy where nobody has any money or a job and doesn't want to spend any money doing anything, you can buy a video game and hang out with your friends online. So that might be why these guys have been doing so well, Activision and Electronic Arts, but they're not invulnerable to corrections, so they're a good trade. I don't know if this turns into something longer term, if we come out of this, like if we had a nice bear market and we started anew, afresh, whatever word you want to use, I think that we could see some of these names lead. And so for now, they're good trades, and grab a couple of points out of them and say goodbye. But it just shows that I will look at the longs. That here's one, YRD. This is a thin little Chinese consumer loan company. They had a nice gap up this morning, but if you bought it yesterday before earnings, you probably would sell into it, and that probably doesn't work. I'll show you some other stuff I'm short. I was actually long this one before. I think we talked about it last week. You got the pullback here. I don't know if you can see this very well. Let's see if I can make it really big. Okay, maybe that helps. But you can see you have this move up. It's a gap up after earnings that's sold into. Pulls into the 20-day line. I figure it's good for a trade up to the 130 level. It gets to about 131 and yesterday and reverses. Now it's coming back the other way. So, I'll put this is a swing trading market, okay? That's why now IBD has thrown in the towel, and they're trying to pitch everybody on their swing trading service, which I think is sort of ridiculous, because nobody there has any clue how to swing trade, and least of all a bunch of low-paid newspaper reporters. So to me, the whole thing is just a fraud. But whatever. The way I approach this market, I'm looking for these swing trades within logical setups where it's confined by the nature of the setup. So, for example, on LinkedIn, okay, the volume thing comes into the 20-day, it's holding. See that? That's the 20-day exponential, to be precise. And the volume is drawing up, so you step in here, and boom, you get a nice move over a couple of days from about 120 up to 131. And if you're smart, if that you see the top of the range here is right around 130.99 on this gap up day, you sell into that, and then you can even flip and go short. And guess what? I'll do that, because that's how I trade these things. That's called swing trading, and I'm doing it long and short. And I've been doing it for the last couple of years. But what leads me to swing trade it? Why am I just thinking, oh, this is going to run to the upside? Well, if you look at this, is a bear flag, or as IBD now likes to call it, an L-shaped pattern, which I think is probably a stretch, because it's really just a bear flag. Let's dispense with the BS and the labels and the marketeering, and we'll just call this what it is. It's a bear flag. And you can see that it tries to get up. You can draw some lines and come up with a nice sort of ascending flag. But if you flip this over and looked at it in the mirror, it would look like a bullish flag, and it's drifting down and it's ready to go the other way. So on that basis, it's still a short to me, but you can trade it within the pattern. And a lot of my swing trading is based on the inverse corollaries to short selling. because I've studied a lot of short sales setups, and I understand that they can have very sharp rallies when they do rally, which is why, number one, risk management is very important, and number two, picking the right short sale point without getting too extended to the downside in case things do snap against you, but also understanding that some of these bounces can be played on the long side as swing trades. And so I'll do that, and it works, especially in this market. Somebody says, feels like a day swinging trader's market. Yeah, I tweeted something like that yesterday. It is a very short-term, or it has been, but let's think about this for a second. The market's been rallying very choppy style, manner or fashion, whatever, and you haven't seen any real leadership. What you've gotten is this massive rotation that you see. They run into the biotech, so you get a stock like Gilead, rallies for a while, and then it blows up, okay? And they run into some of the stuff stocks, the oil stocks, for example, and they rally for a while, and they come in, and they net go nowhere. So, I mean, this has been good for a little bit of a rally. Frankly, if I bought it closer down here, I think there's a pocket pivot somewhere in here. Probably sell it. But you see a lot of this rotation from one group to the other and back again, and the net result is that while they can drive the indexes higher, you're not seeing any big progress in any individual names. So I'm going to run through, let's go through some others right now. But you can see the NASDAQ fails at the 50-day. It's a logical spot for it to fail. The S&P bounced off the 50-day last Friday. That's a logical spot for it to bounce. But within the context of a weak volume rally, because you had light volume 3 days ago, it's set up to fail. Now you see the NASDAQ looks like a fractal head and shoulders, although I don't really look at head and shoulders formations on index charts, but it's probably telling you that this market's got some issues, a lot of issues. More issues than your average 16-year-old. Anyways, for anybody who has teenage kids. Let's see, somebody asked me a question I'm going to answer real quick. Hey Gil, besides HGSI, what other programs do you use to show us these charts? Well, this is eSignal, and I also use stockcharts.com, which I think is a great service as well. And I also use TC2000, what used to be the old Telechart 2000, which was the first charting program I ever used. And I used to have to come home every day and download all my charts into my computer at like a nickel each or something. That's what it costs. But back then, that was like very rudimentary stuff, and compared to what you can get now in real time, it's quite amazing. No after-hours downloads anymore. But those are the other things I use. HDSI is my primary weapon. We pay for a Wanda that Dr. K primarily uses, but I don't find I need it except maybe for a couple of things as indulgences. You know, checking estimates and getting sponsorship. Although you can, if you want to do a little more work, you can get off the internet. So, but I really like TC2000 is also pretty good, and you can throw up a nice array of charts and flip them real quickly. So anyways, here's another one I hit. I've been actually shorting this one off the 200-day when it failed. You can see here another V-shaped situation. It got above the 200-day. I thought it actually could have been viable, but once it failed at the 200-day, to me that was it, and you start working it short. Now you come into the 10-day yesterday, you reverse there, you're heading lower today. I think Facebook, but I actually shorted this morning as well. I could feel it yesterday it gets resistance. I was actually long the thing, and it gets some resistance up here at the highs, and it's a very flawed pattern, so it almost looks failure prone. And I was thinking the other day, well, gee, if LinkedIn can get to 130, why can't Facebook? And then I realized I'm thinking about that wrong. I should be thinking, like, what the hell is LinkedIn doing at 130? So it needs to be down at 120, just like Facebook. So now I'm short LinkedIn on that basis. So anyways, if you think through things, you can usually come to the proper conclusion. But Facebook is you know, somewhat sketchy, and if it is so hot, it may just be overowned, and there's no real impetus for this thing to go higher in terms of buying power, and you really haven't seen any volume on the move to higher highs at the top of the range. So flip from long to short, see if it comes down to the 20-day, and then maybe flip from short to long, assuming it does continue lower. But the other thing I'd watch for here is, remember, and I've talked about this many times on the webinars before, the initial signal that a late-stage failed base is starting to fail is the fact that it will break the 20-day exponential moving average. And I talk about this in the book, Short Selling with the O'Neill Disciples, all over the place. And you can see that It's still well above the 20-day, but if it busted it, that would probably seal the deal as a potential late-stage failed base, or at least one that's going to correct. I mean, long-term, Facebook could go to 150, maybe even 200, but you're going to need a good, a nice, healthy bull market for that, I believe. Let's see, GoDaddy I looked at now. We looked at CCL, Carnival Cruise Lines. These stocks have been rallying because of everybody's all excited that they're going to be cruising into Havana now. Sure. That's what I say. But you can see the rally carries past all the moving averages, but you're coming up into the underside of this little consolidation here. And if you see, you can see here, maybe I need a different color. I don't like this color, to tell you the truth. So you can see here, it's rallying up into this underside of this base here, okay? So what that does is that becomes an alternate area of resistance. And I watch these things. And I've traded this one before from up here, and it breaks down, and it hangs along the 48 level, and it rallies, and now it's probably in a much more optimal short sale position. So how are we doing here? Stock's still heading lower. Facebook 119.17 on the bid. Okay. So anyways, this is one I think could probably be shorted up here. Use a high today as a stop that's reasonably close to where it's trading at. RCL is another one, Royal Caribbean. And it's a little more in a sort of a textbook position. It's running into resistance at the confluence of its 50-day, the blue one, the 20-day here, and the 10-day. So in this case, it ran right into the 20-day exponential, and now it's heading lower. That's the pattern. So if you look at this relative to CCL, Carnival Cruise Lines, it's a much weaker formation. So it looks to me like what you're setting up here is this becomes something of a massive head and shoulders. And I think you guys can see this. You can look at this as right shoulders here. Whoops, my shoulders are not so good there. And then a big head where the right side of the head here is defined by this big volume break, and now you get a right shoulder, and now you're going to go poof down the right side. So that's what I'd be looking for here. I think you use the 50-day as a stop, and see how that works. Market down 48 and heading lower, it looks like. So we're breaking pretty good right now. Some other names to look at. I think you can look at any of these. CRM, Salesforce, they come out with earnings, but to me this is another one of these V-shaped thingies, okay, and it's probably prone to failure. They come out with earnings on the 18th. Maybe that's when it blows apart. Otherwise, maybe it rolls over. The highs of the range present resistance on the upside. You look at Workday, here's another one. They come out with earnings at the end of the month, and that was a short at the 10-day line. It could have been shorted here. See, once, again, a V-shaped, suspicious V-shaped rally, and once it fails at the 20-day line here, that is a sign that it's starting to get in trouble. And so you could come after on the short side here, use the rallies to short into. So Adobe's similar situation. We talked about this on V-shape, but notice how it's trying to break out. And my guess is it's not going to make it. So you short it at the top of the range. Again, that's how these things work. It runs to the top of the range, it comes back in, and eventually I would think it's going to blow apart and head lower. Maybe not until after earnings, which I think are not until June. Let's see, continuing down the line. Let's go, how about this, you guys? Let's get rid of all this, and I'll show my my short selling watch list. We'll go through that. You guys want to do that? Is that a resounding yes? Okay. So let's just start with what's rallying. AGU, let me bring this in. It's rallying up to this high here today. There's some news, I don't know, on fertilizer counts or something silly, and all of the whole group is rallying. So you got MOS, and I think they're all just shortable moves. You see MOS, Mosaic right into the 20-day, Potash, and I was actually at one point trying to be constructive on Potash here, but it failed, and as far as I was concerned, it became a short at that point. So I think any of these are going lower. But I think, optimally you wanted to be on them this morning. Although, if you're not shorting huge positions, so let's say, for example, you short this. The stock is 25.86. The 20-day is 26.82. You're a buck away. That's 4% roughly. Not really optimal for me, but I think something like a CCL probably is in a better position. Or you could go after AGU here, which is, it's trading, what was a high? 89.36. You're trading 87.62. A couple of bucks. So you had to really be hitting these earlier. So let's hunt around and see if we can find anything. Like I said, I like the CCL. Even the RCL probably is in position, not too far away. 75.80 is where it's trading. 76.69 is the 20-day line. Nike already blew apart. I think we've been talking about this one for a while. But again, see the rally up into these highs here along here, and then it reverses back below the 20-day line. This is where you go after it, and it comes in. And you can bank a nice profit there as it undercuts the low, and it may become shortable here again. Microsoft into the 20-day, so you notice how it goes past the 200-day line, but it fails at the 20-day line. Now, this is in a shortable position too. You use the 20-day line as at 51.59. That's only 50 cents higher, 1% from where it's trading right now. CME is another one that looks like it's a juicy short. It's sort of a sloppy, ugly pattern. I don't know if there are any buyout rumors, so you might want to check that because you certainly don't want to get caught in a buyout. But you're at the highs of this range, so this is looking like it's potentially shortable. I don't think you're getting anything on the 620 yet, but it is on my short sale watch list based on the fact that it is showing this sort of a rolling top. So, we'll see if that actually pans out. Sorry, I got to check my positions here. I don't know, things look pretty grim here. Anybody short out there? And did anybody get short this morning based on some of the things that I've talked about in recent reports, or just understanding the whole process of short selling? I would hope so. If you're pretty reasonably experienced at short selling, I think you could see the setups coming yesterday, and you really can't get caught up in trying to be bullish or bearish per se. You just have to see what the setups are showing you and operate on that basis. If you try to get fancy and think, or not even get fancy, but try to take a rigid view of what the market's going to do, you're going to get long and you're going to play a big upside trend. Good luck. And I would even point out, if you look at Amazon, I mean, that looks great. My son actually put his entire account into this thing on the BGU, and it illustrates the fact that this may look great, like 70 points or whatever, but it's really only about 10%. So it takes you 10 days to make 10%. That's how my son is up, he was telling me. But you got to go all in. And if you look at Netflix on a 2-day trade, I'm sorry, not Netflix. What am I talking about? I can't even get my NASDAQ stocks right. If you look at LinkedIn, a 2-day trade, and you're making the same amount, about 10% in 2 days. So as Dr. K would say, that has tremendous time value relative to Amazon, which looks like it's a steady trade, but all it really is a 10% move from a BGU coming out of a deep, big pattern. So I think Livermore's century mark rule comes into effect here at the 700 level, and you can pick up some quick points on it. Livermore would probably play that, my guess is. And I would watch, however, a break back below the 700 level on some volume could bring it into play on the short side. So that's something to watch for. And now everybody hated Amazon, and now everybody's loving it. So let us continue. Where was I? We're going to go through all of these. So let's see. I especially like anything that's up. Wells Fargo. I think financials looking like they're in trouble. Notice how it's hovering in a little bear flag along the 50-day. This might be a short here using the 50-day at 49.13 as a stop. Visa, another doggy stock. You notice that it's sort of a cup with handle, but it's starting to get into trouble around the 20-day. It looks shortable here using the 20-day at 77.96 as a stop. You're trading about 60 cents lower, 70 cents lower, I think. Yeah, about 75 cents lower, roughly. DHI, I think these are shorts, but they were shorts yesterday at the 200-day line on DHI. UA, this thing just blew apart. We've been talking about this one, but once it broke the 20-day, see, this is sort of a V-shaped pattern. You get a gap up, but once it breaks the 20-day, that's it. So that's the first thing you're looking for on most of these. And that's pretty grim stuff. Let's see. How are we doing? Market down 46. NASDAQ down 38.50. How's the volume levels right now, Dr. K? Are they high right now?
On the NASDAQ, it's slower by about 10%. When I checked earlier, the IBD was about even, roughly even.
Okay. Hmm.
Oh, IBD, I think they've got a data problem because they're right now showing minus 78% for the S&P.
Yeah, they probably have a data problem. Everything's falling apart over there. So my prediction is,
Yeah, you can see it with well. I mean, they're just doing the most boneheaded things in terms of making the user experience as difficult as possible.
right.
At least that's what I'm told, so I went and checked it out myself, and yeah, I mean, it's amateur hour over there.
Yeah.
It's a shame.
And with Bill gone, it actually makes me kind of sad. And with O'Neill out of the picture now, it's allegedly with dementia. That makes me kind of sad because it's sort of the passing of a legend. You know, he's not dead,
Absolutely.
but with dementia, he's not functioning. He's not who he was. You know. And if you ever worked
Yeah.
with the guy, I mean, what an amazing stock market mind. He blew me away. And just being able to work with him every day and have him calling me every day to talk about the market and asking me what I thought about this. I mean, in a lot of ways, that was a big honor.
Yeah, his
So
energy is absolutely contagious. I love the phone calls, and I love his drop-ins in my office.
yeah, he'd come by and rap about the market. Sometimes we would hang out, go down to his office and harass him. Remember?
Yeah, yeah, no, I remember, and also we went down to San Diego with him, the three of us, and I still have footage that I got on my video camera of the three of us, just, hanging out.
That was for a Northern Trust meeting.
Pretty cool.
I remember.
That's right. Yeah. I've got about 20 minutes with.
Enough reminiscing. I'm sure we're putting everybody to sleep. Somebody says here, yes, I hit several stocks plus the UVXL. As you have said, when shorting, they should work right away, and it seems easy. So far, at least it seems this morning that is the way it seems. Yeah, you'll get that sense, and they'll feel pretty easy. And so you come in, you hit them, and you're making money pretty quickly. Now, it doesn't mean they can't stop you out, but at least you're off to a good start. And a lot of times when you go short and you start to feel like, yeah, this thing is either pushing against you 20 cents or something like that, and you start to get the sense that, okay, maybe this isn't really what I want to be doing. And you just back away. And you can back away and come back again. That's the one thing I've learned, is that it's okay to cover a short and go away. Just go away. Instead of fighting it. Take a small loss, get the hell out of the way, and rethink it. Or go look for something else that might be set up properly, and which may be getting sold. So VeriSign, a big ugly cup with handle, it's failing. See the breach of the 20-day line? You rally up near it yesterday, that's a short. I think it's headed for the 200-day line, so it's a matter of where you can get in on this thing. So, Celgene, this thing already blew up, but notice how no, wait a minute. I take that back. This thing was a short yesterday at the 50-day line. You can see here's the pattern. It's really never recovered. The whole biotech space has not recovered. U.S. Bank, like I said, the banks probably are coming into shortable range. Just looking around here. U.S. Bank, see, it's breaking the 20-day line, so you get this kind of ugly pattern. So there you have it. Use the 20-day line as your stop. The banks look like trouble. Adobe, back to the highs of the range. I think I already talked about that one. Citrix Systems, another one of these V-shaped. Here's the weekly V-shaped breakout. Busting through the, well, not even, it's busting through the 20-day here and it rallies back above it. So watch for a breach here. I think this is a failure-prone pattern, definitely, without question. So I just covered my Facebook short. We'll see if that, because it looks like it wants to bounce, so I'm going to let it. I'll stay short other things. But if I go in real heavy into the opening, I'm starting to make a couple percent. I'll start to back off and take some profits. And that's mainly consistent with the way this market trades. In the old days, I'd be 150% short if it started to work and things start to roll over. I go 200%. And intraday, I might go 400. But I don't do that anymore because they have this special defibrillator algo out there that shows up every once in a while to jam the market back to the upside and get all the shorts crossed up. So you kind of have to be trying to anticipate the turns, shorting at the best spots possible, and then getting heavy and then covering and backing off. so that you don't get squeezed too much and you preserve a good chunk of your profits. So somebody's asking about VRX. I think if you're shorting it down here, you could be asking for trouble. You should have been shorting it up here. So on the 620, okay, a little knowledge, maybe a different dangerous thing here. I mean, it was shortable this morning at the opening on the 620. So boom, there you have it. If you can borrow it, I don't even know if you can really borrow this thing. I haven't tried to mess with this at all. Okay, I covered Facebook, which Murphy's Law of Shorting says it will go lower, but that's okay because I got other things short, and hopefully they'll go lower. They have been all morning. Let's see. See, on Facebook, look at what I'm looking at here. You're pretty well, you're stretching here on the downside. You're trying to rally. I'd like to see a rally up above 119 to short into, 119.53 rather, right at the 20 period line to short into. But market doesn't have to do what I want it to. In any case, I try to stay reasonably disciplined, and I work my positions and make sure I'm building a cushion on the way down. If you can be 50, 60, 70% short on a day when the market gaps down huge and breaks apart, you're going to make a lot of money. So that's really the key here. VoSI, video archives, put them on streaming video. I don't know, that requires server space, Scotty, so I'm not sure. Somebody's asking about MXL. This is was a viable gap up, and I think the problem is the market. It's at the 50-day line, but I'm not going to buy it. I'm not really looking to be long here just yet. I need to see some sort of improvement in the market, and if it did so on an intraday basis, maybe I'd come after it. But I don't think I'm going to do that right now. Continuing with our parade of short sale targets here. We've got Starbucks. Okay, look at this. See, and this is why you have to be alert to these things when they're happening in real time. Rallies into the 20-day line yesterday. Boom. That's a short. It's rolling over. Look how easy that looks. Here's win, another one. This is in a nice shortable position. I think it's been beaten down. It's come down for a long time. So let's kind of, like you can see, it's just way down there. So it might not bust apart, but it's possible it could be shorted here, looking for it to break to lower lows, at least maybe down to the 200-day moving average. That's a possibility, which of course brings up LVS, which is faltering at the 10-day line. This was shortable the other day at the 200-day line, and may still be shortable since the 200-day line is only about $1.50 higher from where the stock is currently trading. So let's see, GoDaddy going down. Facebook's just hanging there. I don't know. I always think if you can get a buck shorting Facebook real quick, short a big position, it's liquid, like 70% position or something, then cover it. You got a little cushion there, and that's basically what I'm trying to do as I get short. I'm trying to build some cushion because I have to guard against snapbacks in my face, and I don't want it to suddenly be in the red. If everything turns on me, I want to be taking some profits on the way down. And that's a little bit of a different way of operating than I have in the past, but it's due to the funky, crazy, nutty QE market that, rallies can materialize out of nowhere, literally. And you guys know what I'm talking about, too. Dismal Disney. Here's a nice shortable gap down, rallies to the 20-day, probably a short here using the 20-day line as your stop. Expedia. This is like Priceline. It was shortable around the 200-day line the other day. So here you're busting. You're at the 20-day line, so you could watch for that. But I prefer to see a rally up closer to 116 or so. If you look at Priceline, it's this is easily a short here. You can see the V-shaped cup with handle, late stage, and Priceline's really gone nowhere for a long time. It's late stage. It's rallying at the 10-day. Boom, there it is. So. This is actually kind of tempting. Use a 10-day at 1286 as your stop. Why is it rallying? Anybody know? Is there some news on it? Let's check this out real quick. This one's like oozing juice, so it looks too juicy to be real. Some hedge fund. Egerton Capital discloses updated portfolio positions. Priceline, they increased to 400,000 from 300,000. Yeah, okay. Okay. Gilmo says short price line. Okay, I just put out a little position here, but here's what it looks like on the 620. You can see that you're in this range here. So you're at the highs of the range. In my view, that puts it in a shortable position. You can, if it rallies to the top, 1286, however, is where the is that right? 12? No, I'm sorry. Yeah, 1286 roughly is where the 10-day line is. So if it gets you there, you're just gone. If we got to the 50-day, which would be the underside of this area here, that would be better. But I think you can test it here. What you're banking on right here is the market rolling over. So I just got out of position at 1279.57. So now all you guys start knocking it down for me. Okay, can you do that? Thank you. It's coming in. Look at that. But that's in position, and the stop is relatively well defined. 6 points on this is, you know, 0.5%. So obviously you scale your position properly. So that's my son was all ticked off because he felt, given all the points you see in Amazon, for example, you know, he puts the whole thing in his account, and he's only up 10%. That doesn't seem like a lot, but that's because you're falling prey to the illusion of points. It's not points, it's percentage and position size. So it's invested dollars times percent move. That's what you make. It's not, you don't make points. I've never been able to redeem stock points at the store or anywhere else. But that's a good one. Okay, so we did a real-time trade for you. We'll see where it goes now. 127957 I'm in. We're offered 1279.4 something. Let's see. Yeah. In fact, that should actually be on my list. Why isn't it? Huh. Okay, let's go to Amgen. Breaking the 50-day. I like it better at the 20-day, but you can see that's where it was yesterday. And similar to all the other biotechs, it's still kind of weak and funky and ugly. And yeah, Facebook is going a dime lower than where I covered it, so that makes perfect sense. Let's see. If the market comes down, it's going to be a situation of just short anything. If you see any stock that's green and up on your screen, just short it. And the market blows apart, guess what? Everything's going down. Google is one that we've talked about repeatedly, and you know, this to me is in a shortable position at the 20-day. It kind of gets into this area between the 200-day and the 50-day. But the reality is, if you're at 720, what is the 200-day at 721.40 up to 746, that is 25 points, which is a little over 3% range. That's anywhere, shorting it anywhere in here using the 50-day as your maximum upside stop would be a reasonable strategy, right? Am I correct? All right, Dr. K. And then you look for the 200-day break as a confirmation. So you know that may be one to look at here, and your percentage risk is really not that great. A Caterpillar, this is a good example of a stock that I kept shorting and shorting up in here, and it just wouldn't go down, so I blew it off. And of course, Murphy's Law of Shorting says if you've been shorting a stock for 3 to 4 days in a row and not making any money, and maybe not really losing any money either, as soon as you stop shorting that stock, it will go significantly lower. And that was precisely the case with CAT. And it breaks to the 200-day line now. It's hovering on top of it. To me, you know, if you got a rally to the 50-day, that would be a nice short sale spot. But I suppose here, if you're looking at this on a weekly chart, that's pretty grim. It could head back to the lows. I don't see why that couldn't happen. But you're holding on the 200-day and the 40-week, so I don't know. Data I thought is eminently shortable this morning. It's rallied up into the 10-day line, and this looks a little bit like LinkedIn. See the big break and you get a bear flag. This is a bear flag. You can draw lines across the top here. You're rallying back up into the middle of the bear flag roughly, or the middle of the channel that forms the bear flag. So here, let me do this just because I'm in a drawing mood right now. So here's the lows of the flag and the highs of the flag, and you can see it's waving in the wind, and it has little, and here's a reverse, somebody knocked the flagpole over. Anyways, shortable up near the 20-day line. We've got to erase those drawings. Okay. I'm not really that good with drawing with a mouse. Are you that, Dr. K? Are you able to use a mouse to draw stuff with?
I think you're a natural because you're cartooning.
Okay. Yeah.
I'm impressed how fast you throw these designs onto the charts. It seems effortless.
Actually, I'm incredibly spastic doing it, but whatever. Let's see. How we doing? Dow down 45. NASDAQ pushing a little lower, minus 39. Price line 1280.70. Oh, I'm losing money now. Come on, you guys. Push that thing down from... Actually, the bid is 1278. So, well, 1278.40. So you're kind of in there. Anyways. And I'm not shorting, you know, anything more than the normal starter position, so it's pretty small. Let's see. Workday we looked at. Illumina, here's another one. See how this rallies? This is about as ugly as you can get. And you see the rally into the 20-day line. Boom, it rolls over. So down 54 now. Yeah, I think we're going to make some significant lows. We'll see what happens. So unless they set the defibrillator algo up. You guys know what I'm talking about. It's like you'll see the market coming down, and all of a sudden, just out of nowhere, it starts to rally madly. And my theory is that Goldman Sachs or some other evil big brokerage firm has an algo that they unleash when they need to keep the market from looking too ugly. Continuing, we only got about 10 minutes, so I want to get through these. Here's Splunk. Rallies, you know, breaks. Again, a V-shaped pattern. Your first clue of trouble is the breach of the 20-day line. Rallies into the 50-day line, short it, and there it goes. I think earnings are coming out at the end of the month. Tesla, we've been talking about as a short. Now, I thought when it undercut this area here, notice how it showed no tendency to rally back above that undercut. It was a very minor undercut and rally. And at that point, I think it's shortable using the highs here as a stop. Obviously, you'd love to see a nice juicy rally into the 200-day line at 224 to short into, but you don't get that, so it becomes a little bear flag, and it's heading lower. And don't be surprised if you see this turkey down at 140 again. We could pontificate about Tesla and the whole ludicrous numbers behind their business. I mean, once all the aura of the innovative aspects and the futuristic aspects and the enviro-industrial complex aspects, or the global warming industrial complex, which is all the companies that are feeding off the government in the name of fighting global warming, and Tesla getting, what do they get per car, like $7,500 subsidy? And they can't even sell too many of them. Anyways, Gilead looking like crap. This is probably a shortable gap down here. Delta Airlines, the airlines are just a mess, and they have been. I think we talked about this as a short up in here way back when. Biogen, I think we've looked at. Breaking the 50-day, it's a short here. Use the 50-day at 265.52 as a stop. How's my price line doing? No love yet. Not even the scent of love on that one yet. But it's in position, so we'll see how it hangs out. I was joking earlier that if you get heavy short into a rally, and you're probably going to go through a couple of pairs of underwears. Although I did come up with the brilliant idea that Depends could market their product as suitable for short sellers, because then you would just use Depends and you wouldn't have to change underwear several times during the day while you're shorting. And they could put some sort of vibrating price alerts inside them, built in. I know that probably conjures up all sorts of disgusting things, but we won't dwell there. Alaska Airlines, another one. See, but this is where you get these V-shaped patterns and they blow apart. So all of these others that we're looking at, Adobe, CRM, the ones that are still holding up, they may be the next ones to go. I was looking at some rails short because they also were rallying. They were kind of ugly duckling rallies. And notice you have the break of the 20-day line, resistance along the 20-day line, that's shortable. Now you're busting the 50-day line, and you could theoretically short this using the 50-day line as a stop, theoretically. These are not, like the price line is probably the most optimal thing I'd short here. You had to be hitting these yesterday. So Hawaiian Airlines, here's the breakdown. They come down to the top of this base. You can see right around 40, and it found support there for 1 week, which is this bounce here, and now you're rolling off the 20-day line. And that was shortable right there, so coming off. And these things, here's GoDaddy. I'm short this one from here yesterday, right at the 50-day, and it's just continuing lower. Avago is coming apart. Again, here was a sort of a, I don't know, this was a late-stage improper cup with handle thing. I just think it's a crappy looking pattern. You had to buy this thing down here to make this money nice and slow, and now once it breaks a 20-day line, that becomes resistance, and now it rolls over. So there you have another example of how these work. Okay, I'm starting to get a few smooches from the price line here, coming off just a little bit, bid 1276.80 something. Mobileye is another one. Yeah, somebody just pointed that out. Yeah, here's another one. See, V-shaped rally. It breaks a 20-day. That's your first sign. You rally back to the 20-day, and kaboom, you're rolling over. I tried to short this yesterday. I couldn't borrow it. A number of stocks have become unborrowable. Apple, I thought this might have a shot at rallying, but no. It shorted this morning, I think, and used a 10-day line as a stop, and you're breaking down out to the downside now. That looks pretty grim. JetBlue, I think we talked about this last week. It's another one. I think it had a, let's see, whoops. Yeah, it's sort of, see the big head and shoulders form, and you can draw a neckline down here at about 18 bucks, maybe a little higher, and now it's busting the neckline. But I'd rather short it on a rally up into the 50-day line, which would be 2023. So you're ways down now. But again, you could have been shorted earlier in the pattern, could have been shorted yesterday at the 10-day line. We got 4 more to go. NXPI, and here's another one, sort of a V-shaped rally, but it's still a very weak pattern. Breaks the 20-day today. Any kind of bounce, and you can actually see the 200-day line is running through there too. So it's actually broken the 200-day line. It's sitting on the 50-day, possibly shortable here using the 200-day line as a stop, but I would have rather have hit it closer to the 20-day line. But, you know, if the market's going to blow apart, like I said, you can short anything probably and make a lot of money. So we'll see, though. I mean, I don't take anything for granted in this market. You can't. Netflix again, another little bear flag, and it's breaking out and probably shortable. I thought maybe you'd get a rally to the 20-day line. You kind of did in here, but nothing doing. And that shows you how weak a lot of these names are. And even in the midst of, you know, supposedly the index is looking good, you've seen a lot of these stocks breaking down. And to me, that's been a major clue that there is a problem here. Here's Palo Alto Networks. You know, this is just a failed breakout here. It blows apart. You've rallied all the way to the 200-day line, the 40-week line. That's where it was optimally shortable, right here, up in here. And you notice that it hits at the 40-week line roughly. It gets a lot closer to it and doesn't quite get to the 200-day, but anywhere in there. And then once, you know, breaks the 20-day here, it's shortable here. But you do find some support. You rally back up, and now as you break the 20-day again, it's shortable. You get a rally up towards the 20-day. You hit it again. So a lot of these are already have already hit optimal short sale positions and are rolling over hard. So, you know, in some cases you're a little bit late, but we've identified a couple here that you might that might be more timely intraday. But you have to anticipate this, and I think I've talked about short sale targets over the last couple of webinars. So hopefully those of you who do short sell or sell short, hopefully you have put together your short sale watch list, and you were watching this and maintaining what I call a bifurcated approach to the market, which is being willing to go long or short on a very short-term basis, I might add, a swing trading basis. Do we have a new swing trading product to sell people, Dr. K? So does it come with a special swing traders decoder ring? I think
we're gonna
try that.
Yeah, we're gonna have to make a deal with O'Neill and Company. Otherwise, we'll, you know.
Yes.
They dibs on that concept.
Anyways, somebody says try using an elephant to draw. It's kind of like that. You know, using your hand and a mouse. It's not that easy to draw things. Okay, so I've covered all of our short sale targets. Let's look at a couple other things real quickly. Gold has been holding the breakout, but rest assured that if the market gets into some forced selling, which I'm suspecting that's what we may be seeing now, these things are going to come down. And so there's no sense trying to play them. I know some of the miners have been flopping around. They're trying to find support. You know, SLW is one. These are my favorites, and Agnico is another one. And they're holding up, but I don't think you're going to make any money on these. You know, trying to buy them into a general market that's tanking. Let's see, other things that I've been watching on the long side. There's a Fabrinet, but my guess is going to break. You know, Fortinet, has tried to hold the 20-day, but that's a V-shaped pattern. My guess it's going to break. So it could even be looked at as shortable. BABA is another one I've been watching. That looks like a potentially shortable stock. See, you get this V-shaped cup with handle, and it's just starting to break the 20-day line. So not looking good, to say the least. Let me take a look at this here. Yeah, that looks pretty grim. So along with Palo Alto Networks, it's coming apart. Facebook hanging out. Let's take a look here. I think if the market comes apart, it's definitely going to test the 20-day line. So any other questions before we sign it off here? But I think, yeah, hopefully I've given you guys some actionable stuff to go after. I think the market's looking pretty grim. So I need to notice CCL has come down about 30-40 cents since we started talking about it. That was in a good position. It still is. RCL, another one in a reasonable position. Let's see. People have asked about MXL. I don't see anything I'd be going long right now. This looks like it's going to get a lot worse. So anyways, hopefully it's been helpful. You got some ideas, PayPal, I already covered PayPal, but I'll cover it again real quickly. I wouldn't buy PayPal, but I'd look at it as a short. Look at this. This is the pattern on the weekly since it came public. So it's this big ugly base. You're at the highs. It's a short. Use the 20-day at 39.34 as a stop, or the high of the day at 40, around 40 and change, or $40 as a stop, pretty much. And that would work. Level 3. You're bringing these up as shorts, right? Yeah, you got to be. Yeah, that's a good. I like that. You got a good. That's a good chart eye. Picking those up, I think. And this one too. Yeah, you could also already be short these. And if you've read the books on short selling, and you've seen what we talk about on the webinars, there's a lot of other stuff that looks similar, and you can put together your own list of short sale targets. You don't need us necessarily to tell you what to short. I want to teach people how to fish, not necessarily hand them a fish, to use an old silly cliche. But anyways, yeah, those look reasonable. And if you got a plan for how you're going to handle them, obviously the confirmation would be if they level 3 breaks the 20-day line, and if what was that on PayPal? If PayPal, which is it's breaking the 20-day line and the 50-day, so you're dead on with these. I mean, I have PayPal on my short sale watch list. I have to add this LVLT as well, and there you go, everybody. So that's all we got, and hopefully, we'll see what happens. Is the MDM on a sell signal, Dr. K?
Yeah, it remains on a sell signal.
Okay. All right. Too bad the VIX model didn't go to a buy, but this market is so volatile that it seems hard to measure the volatility, because one day you're up 200, the next day you're down 200, the next day you open up 100. It's a crazy market.
A lot of noise out there, but what I like about, what I like about the VIX, as we saw earlier this year, is when you get these volatile environments, it can start issuing signals quite frequently, and on balance they can on balance be up. In other words, the gain more than outweigh the small losses. So I'm actually in a very good space, or I feel like I'm in a very good space as concerns the model, because the volatility in the market seems to be on the rise here.
Yeah,
and
definitely.
Maybe start to increase the level of the correction. I mean, it looked to me for a little while like the QE was just going to push everything higher once again, with the S&P and the Dow only off a couple percent. But now we see that the Dow and S&P, they're both testing their 50-day for the second time in a week. And, it increases the odds that they're going to bust through it.
Very good. All right, that's all we have, you guys. Thanks for showing up. Have a great weekend. And if you're short today, as I am, let's see if we make some real money. I know I'm doing pretty well. I think I can buy a little bit of sushi, maybe a little more, and maybe I could buy a sushi restaurant, but that's another issue. All right. Thanks for showing up, you guys. We'll catch you next week. Have a great weekend. Take care.
Oh,